Hello. Yes, good afternoon, everybody. I hope you can hear my voice and at the same time see my screen clearly. So today's webinar, I want us to look at a very good strategy for beginners. We've looked at this before, but I just want us to expand slightly on what we looked at, and then we see exactly where to trade, when to trade, which currency pairs to be trading. So before I start, I want to say that we've been having like an offer where the rollover fees, where if you're trading cryptocurrency, we were not charging you. So we were not charging rollover fees. It started from 5th of June this month. It has been going on and it will continue up to 20th of this month. So if you are encouraged to trade cryptocurrencies, just look for the correct times to trade, knowing that even if you hold your trades overnight, we won't be charging you any rollover fees. So the strategy I'm going to teach you today is just an extension of what we've looked at in the past. You can check our videos in the archives. We do have a lot of videos talking about strategies that are very good, very profitable. We've used them personally. I've used them personally, and I would like to recommend that you too, you get to try them. So I'd like to say that even though I'm saying that this strategy works on 5 minutes, you could use it on another time frames. Maybe you can, if you're somebody who is very conservative, you may attempt using it on the 30 minutes time frame, or you may also use it on 1 hour time frame, or you may use it on 4 hours, or even daily if you're even more conservative. So that's just something which it depends on the individual. But personally, I do believe that whatever is happening, so if you are monitoring lesser time frames, you are the same as somebody who is monitoring a higher time frame, just that you'll be entering more frequent trades. The person trading on the daily time frame will be entering few trades which may be profitable for them, but I would recommend you just do it on 5 minutes time frame. So the first indicator which I use on this is the zigzag indicator. I'm going to explain why the zigzag is useful and why I use it. So a lot of people have asked me, okay, if you enter trades, how do you have your stop loss? How do you know take profit? How do you know exactly which losses to be putting? The answer is very simple. Do not trade just some fixed lot size without fully understanding why you're fixing that lot size. So do not enter any position and have fixed lot size without fully understanding why the lot size is fixed. Does that make sense? So before you enter into any position, before you enter into any position, just ensure that you understand very well where your stop loss will be at, and at the same time you understand why you are putting the given lot size, and at the same time you know exactly when to exit the winning trades. So those are the two main things. We know where our stop loss is. We know where our stop loss is. At the same time, we know exactly when to get out of a losing trade. So those are the most crucial things that you must bear in mind anytime you are entering any position. So irrespective of whichever pair you're trading, don't trade without a stop loss. Don't have some way of getting out of winning trades, and don't just fix your lot size without knowing entirely why you're fixing your lot size. So most people, since they don't understand why they're entering trades in the first place, they don't know exactly where to have the stop loss. Or some people, they know where to enter the trades, but they don't know where to put the stop loss. This is where the zigzag indicator comes in. So it is available with FreshForex. The zigzag indicator is available for everyone for free all time. You can find it in our platform. So it should be there also in your platform. I don't know exactly which platform you're using, but it should be there both on FreshForex MT5 and also on FreshForex MT4 and also on MT5. So look at this here. look at this, what has been happening from this point. We've had this a low which is higher than the previous low, another higher low, another higher low, another higher low, and another higher low. Then at this time you can see that the price went to the same low, continued up, it came back down, attempted to break below it, it could not break below it, then it went back upwards, came down, nothing much happens. So whenever you're looking for a position on the 5 minutes time frame, and maybe you're just trading a breakout of structures, like you have this, sorry about that, like we have this high here, and you say that when the price breaks above it, you enter a position, which is a strategy in itself. You enter a position. If you don't know where your stop loss should be at, the best place to have your stop loss is actually below this low. Your take profit should be 2 times what you have as the stop loss. So when the stop loss from this point to this point is maybe 20 pips, your take profit should be 40 pips from the point of entry. So we'll enter there, have a take profit 40 pips away from where we've entered. So we'll enter position there, then we'll mark this as a new high, and we add a position there. We have our stop loss there, and the price goes above, continue up here, we add a position, we have our stop loss, then we continue even higher, we have our stop loss, we have our entry. So let me just not delete these lines, let me have them on the chart so that you're able to see them clearly. We have that entry there, we have another one here, and we have another one here, then we have another one here. So the reason I have this horizontal line is that when the price attempts to break and close above them, immediately the price hits this line, you pick a position, you have your stop loss below this low. So you can see from this point, if we picked a position here, somewhere there, the buy was successful. If we took another buy here, it was still successful. And if we took another buy here, based on this candle, this was still successful. Then if we took another one here, this was still successful. Then if we took another one here, this is still successful. And if we took this position, this is definitely a loss. Now let me explain why it's a loss, because we entered a position here, our stop loss is somewhere here. So when the price did not go 2 times what we had as the stop loss, the price actually came down, and eventually took out our stop loss. So this is a bad one. That was a bad position. It does not mean that the strategy in itself is bad. No, the strategy is good and is profitable, just that the price went against you. So in such a case, you don't find yourself lamenting or trying to shift exactly what you know. Okay, so the question most people have asked me is this: if you enter, maybe this is 5 pips, 10 pips, 10 pips, maybe 10 pips, 10 pips, so cumulatively you've had like 50 pips. Then you find yourself in a case like this, where only one trade, the stop loss should be at 50 pips. How do you counter this so that you don't lose everything which you've earned from the past? The answer is very simple. The answer is very, very simple. This last trade here is going to be a trade if you fixed a lot size. So for any given trade, there should be a fixed amount of risk, but the lot size keep adapting based on where the stop loss should be at. So if you have 10,000 USD in your account, you say, okay, for every trade I'll be risking 200 USD. Now, with that 200 USD, which is the amount you are risking, some fixed amount you are risking, calculate where the stop loss is, the distance between the point of entry and the stop loss. Put that down as the stop loss distance in pips. Then put 200 as risk in amount. Use those two to calculate the fixed lot, the lot size which you're supposed to use for that given trade. So if you put that into perspective, you'll find that there's some cases here where you are risking 200, but the stop loss is very close, so the lot size is very big, and eventually it goes away. The same thing happens here. You'll enter position, the distance is not the same as the distance from the past, so here you are still risking 200, but the lot size is not the same as the previous one. If the price goes against you, it's just 200, but if the price goes for you, you'll earn 2 times where how your lot size was. So that means if the volume here is 0.05 or 0.06, if it goes your way, you'll earn way more. Is that clear? So you'll get that if your lot size is 0.02 here, so this is, we are risking 200 USD in this trade, but the distance is very small, so the lot size is very big. The same thing, we are still risking 200 USD. The lot size is not very big because the distance between entry and stop loss is a bit wide, but we are still risking just 200. So here the lot size is bigger, is smaller compared to this one, but it's still a good profit. The same thing here, we are still risking 200. The same thing here, still risking 200. And here, where the distance between where point of entry and the stop loss is very wide, now this one, you'll find that we are still risking 200. The stop loss is very wide. The take profit is very wide. If this goes against us, we are only going to get out at 200. Does that make sense? Are we on the same page? So you'll find, instead of fixing the lot size, fix the amount that you expect to lose for every trade. That way, you'll find that if you are risking if the stop loss here is 200, when this goes double, you earn very well. You earn double. The same thing, double. The same thing, double. The same thing, double. And because this is 200, the distance between this and this is 200, when you take double, that is 400. So if you come and lose here 200, you're still safe. You're still very, very, very safe and in very good profit. You may think that this is too simple, this is easy, this is a piece of cake, but the problem is this: if you can't be consistent, it is better you forget about the whole thing for trading. It's very, very good. Forget about the whole thing about trading. Try another thing. Try something which is useful. Like you may try to analyze your charts, you may try to do a lot of things, but ensure you are very, very, very disciplined, especially when it gets to entry, when it gets to your lot size, when it gets to the amount that you're risking. Remember that what happens is this: just keep this in mind. Your money is safe. Your money is very, very, very safe until you enter trade. Is that clear? Your money is very, very, very safe until you enter a position. So before you enter a position, you are losing. Anytime before you enter any position, before you enter any position, you are safe. You're safe, you're safe, you're safe. But immediately you enter position, you will either be losing, or when you can't be the same after entering a position. So that's why you have to be very careful. Before you enter any position, calculate perfectly well. Find out, like calculate perfectly well what you expect, what you want to do. When you enter position, hold on to that position until stop loss, until the take profit of the stop loss is hit. Do not find yourself in any way trying to manipulate or to close trades before it matures. Are we on the same page? Is that clear? So that is one strategy which I use mostly. It's based purely, strictly based on zigzag. Everything is covered. Like we have the stop loss, the place for the stop loss. We have the place for take profit. We have the place for almost everything that you can think of in any given trade. Everything is covered. In this case, we have everything under one roof. So if you just keep on like this, you'll get that there are several places where you could have entered the trade and it was successful. Like, look at this point here. You could have entered this, it was profitable. You could have still entered this break, it was profitable. This one stops, you couldn't have entered that. You could have entered this could have ended into a loss, but remember you are losing a fixed amount. You could have entered this of the stop loss, this could have been in profit. You could also have entered this is profitable, so you could have seen that the price has gone up. Then maybe this one, something else, avoid places where the price moved extensively to that given direction, then came back and you had to place a stop loss at this point. I'm not saying that is going to be a bad trade. The only problem is this, that you may get stuck in one trade because the stop loss is very far, the take profit is also very far, but what you're expecting to get is very small. That could be an issue. So that's why I'm saying you have to be very, 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 very careful, especially in cases where that's entirely what I wanted us to look at for this session. That is what I wanted us to look at. So that's just everything which I wanted us to look at today. That's what you're supposed to just practice it, ensure you get more places, like you get more entries. Try to understand how you can play around with the period for the zigzag. But so far this is just the default period. You can play around with it and find maybe the correct inputs that will give you the less, will make you lose less but still gain a considerable amount of money. So thank you very much, and that should be the end of today's webinar. We'll meet again next week at the same time. Thank you and see you.